What's going on, everyone? NebraskanGooner here. I'm excited to bring you episode 2 in my Femex official podcast series called Trading Trenches. And today, our special guest is BigCheds. Really excited to have him on here, but I do want to take a minute to talk about Femex Official and their website. If you haven't tried it out, it's femex.com. There is a link below if you do want to check it out. I really like that if I set limit orders, I get paid to fill them. That's definitely my favorite thing about the exchange, my favorite feature. So that's right. All you have to do is set limit orders, and if they get filled, you get paid a fee, basically. So instead of having to pay trading fees, you get paid a fee to get those filled. Not only that, they do have trailing stop losses as well, which can be a really good feature on low time frames if you're trying to lock in some profits and there's a lot of momentum. So now let's get out of the trenches with BigCheds. You guys, I'm super excited to have BigCheds here with me today. If you don't follow him on Twitter, you are missing out. He posts amazing, unbiased content. He's a great guy and a great trader. And not only that, I'd really like to start off with saying congratulations to Cheds for being a cancer survivor. I can't imagine what he went through, but I was following you through that whole thing, man. And it's inspiring. And I'm just so happy for you that you're doing so well now. Thanks a lot, man. It's very nice of you to say that. I was lucky when I was diagnosed with cancer. I was really young. I was like half the median age for my cancer. So I had, that gave me confidence that I was going to beat it. And then just an amazing support network, just people helping me out. So yeah, a lot of people helping me. It was kind of a team effort. Awesome, man. But thanks, man. I appreciate that. Yeah, man. I just can't imagine. I worked at a cancer center for a few years in college, and man, you're stronger than me. So I'm really happy that I have you here today and that you're doing so well. And so basically, Trading Trench is an in-depth look behind the trenches, right? Into the trenches, behind the computer. We don't get to see this too much on Twitter. So I'm really excited to bring our users a little bit more in-depth view of what actually makes us good traders and what our routines are. So I'd really like to first just start off by introducing yourself a little bit and telling us a little bit about your background, how long you've been in the markets and things like that. So yeah, people kind of know me as like a newbie helper and like a chart nerd. I've been trading for a long time, probably about 15 years, and I've been doing teaching and kind of educating other people for maybe a little more than half of that. And when I started, I made a lot of mistakes just like anyone else. And I started to apply some of the things I've learned. I've started to teach them to other people. And, by teaching, it helped me kind of solidify the things I'd learned. And I started to kind of grow my online presence through my Twitter account. I had a blog, many years ago. And that just kind of took off. I'm a founding analyst now at Bitcoin Live, which is an educational platform. Some people know me from there. I have a weekly show on Banter, Crypto Banter YouTube, which is really cool. I interview guests and do stuff like that. I'm also a published author. I recently published a trading book called Trading Wisdom. I do have your book. Yeah, hell yeah, man. Thanks. I just started reading it. I'm a slow reader, so I just started getting into it. So it's meant to be like the kind of book for people who don't even like to read, but if you're into trading, you're going to love it. It's very easy read. I totally agree. Yeah. So that's good for me, especially. Yeah, I'm trying to really boil it down. It's just my lessons of the mistakes and the lessons I've learned throughout the years. So where can people get your book at? It's on Amazon. It's on Amazon right now, Trading Wisdom, or you can just Google the words Trading Wisdom. It should be the first result. On my YouTube channel, Cheds Trading, I've been doing kind of a free version of the book, one chapter at a time. Some people can't get the book, in different countries or whatever. So, it helps me sell the book, but it also helps me get the book out for free. So it kind of a win-win for everyone. I think I have 7 chapters, 7 of the 50 up. So if you wait 2.5 years, the whole book will be up. Perfect. But right, everyone so check that out on YouTube by then, and it won't matter. They'll each buy 5 copies. Yeah, Bitcoin will be at 1 million at that point, or 5 million. Yeah, and I'm CMT, so I'm a chartered market technician level 1, which means I take it pretty seriously. Classical charting, Japanese candlesticks. I used to play poker a lot, so I take that kind of like risk management, those strategies as well. I'm actually writing another book on how poker and trading have a lot of similarities. Oh, that'd be interesting, because I actually use a lot of my gambling strategies 100% in crypto, and it's not Gambling, it's more my risk management strategies, right?
Yeah.
Because I think in crypto, you kind of lose it a little bit more. If you're at the casino and you really get a feel for the streaks that come into play and how Fibonacci works and how there's just sometimes where the market's against you and you're mad. Like I remember one time being really mad at the roulette table and I just kept doubling down on even numbers. And I never bet even numbers, but I kept doubling down on even and I kept going bigger and bigger until I lost all my money. And there was literally 13 odd numbers in a row. And I was like, what are the chances, right? But it's just like in the crypto market, you enter a position, you're like, oh, what are the chances? What are the chances? And you keep losing. So,
well, you talk about it's the danger of letting your emotions get in control, and that's one of the biggest similarities.
100%.
Revenge trading. And I actually went and played poker. There's a story that I'm now going to work in the book because it just happened. I had been really itching to play poker, and I finally arranged the time, with my family or whatever. And I drove like an hour to the casino. So I was waiting weeks to play. I drove an hour to the casino. It was a brand new table. It was 6-handed. And within 6 hands, my whole stack was lost.
Oh, wow.
And I played like solid poker. I played what I wanted to play. It just didn't work. I had a draw. I led, I bet out the draw. Another time the guy rivered me. The other time, I had a set, the guy had a full house. It was like, okay, I don't play loose. Like I have a very specific strategy. I played hundreds of thousands of hands, but I lost. I really wanted to play. I lost it all in 6 minutes and I just got up and drove home.
Wow. But you did it the way that you had planned, right? You went in there and you did. So that's a great point.
The biggest lesson for me though, is that I didn't keep playing. That's how I was on tilt and I knew I was going to be on tilt. So that's how I limit my loss. When I lose money like that, I know I'm not going to play good poker. I get up, I'm done. So that's how, I could never really be like a big time gambler because I hate losing.
Yeah.
As soon as I start losing, I quit, I stop, I step away and kind of reset. So that's how I do it. Other people fight through it and maybe they're built differently. But it's you against yourself. That's the biggest battle.
That's just a great point in the markets too. I mean, I actually have I don't go to the casino much anymore either because when you have trading, you have a risk to reward. When you're trading at the casino, it's like there's no risk to reward. But anyway, so I did the same thing except for I sat down, I played blackjack and I was kind of just being like halfway degenerate. I was just like hitting when I shouldn't and not hitting, I was just whatever. And I lost and I'm like, okay, I didn't stick to my plan. I didn't play the way I should play. I didn't follow the right rules. And I was kind of like, it wasn't very much money. It was like $300. So I wasn't upset about it, but I was like, okay, like that's my fault. I screwed up. I didn't play by the rules. So it's kind of like the same with trading. Like you need to follow your rules because if you don't and you lose, then you're going to be upset about it. And then you're going to kind of feel like you did it wrong. And, like if I followed all my rules and lost that money and I played the way you're supposed to play blackjack, then you can't be mad. The game just wasn't in your favor, right?
That's it. So that's it.
That's you
can be mad. It's just not going to help you out.
Exactly. 100%. You're right. That's a great point. I love that point.
And it's hard to deny yourself too. Like with those emotions, you can't really suppress it. I think you have to just face it, absorb it, let it pass through you, and move on. If you pretend you're not mad or you ignore it, will bubble up and then you'll do something stupid, like punch your best friend or something.
Is this like a personal experience?
Yeah, we don't have to go there. So.
But so that's a great point is I actually read a book about controlling your emotions. And the biggest thing they said is to be aware of your emotions and understand how you're feeling because some people just suppress their emotions. Bam, exactly.
I love that book. Yeah,
you have to know your emotions. You have to know how they work against you and in your favor. So that's a great point. So
definitely.
Well said. Are there any traders or mentors that you looked up to when you got started out?
When I started to get serious, there was one person. Her name is called Suo Moon, and it was a synonym. It's not her real name, but I was with a group of traders who were heavily invested in something, and we were really underwater and looking for we're looking for someone to tell us it's going to be okay. And she kind of came in, instead of doing that, just like taught us a couple things, and I started to become empowered. So I had that first teacher who really started to empower me and teach me stuff. And I got that fire burning, and I really wanted to study and learn more and teach myself some new tricks. So like way back in the day, definitely, that was definitely one of my mentors, so to speak.
Wow, that's really cool. Yeah.
I mean, since then it's been peers. I've been just drawn to good, clean technical analysis. I've been drawn to people who put out put out work, they're active, and they don't try to sell it too much. I mean, there's a lot of people on Twitter who make a living with narratives and with just, memes and stuff like that. I mean, that's fine. There's a place for that. I think the community needs that. But I just I'm just all about those academic observations. Like something about that just like gets me hot. I love me some painfully objective academic observations.
There's no emotion involved. There's no emotion involved in it. You post exactly what you see. Yeah. And it's there. Nobody can dispute it. You're just saying, this is what I see on the chart right here. This is what it is. This is the technical pattern being shown. Nobody can dispute it. Nobody can argue it. They can take the information how they want. But you're not here saying, oh, yeah, this is going to go to 500 million right now. Buy. We're going to pump. And then, it doesn't happen. So I love that about you. It actually helps me in my charting too. But not only that, but when I read your post, it doesn't invoke an emotion, right? And that's the biggest thing I really like about your charts is because in your post is that it doesn't make me feel emotional immediately when I read it. If I read somebody,
I'm a cold bastard is what you're saying.
No, it's actually a good thing, right? Because what happens if you see a post that's super bullish, bunch of rockets, big arrows going up, you immediately are like, oh my God, I can make money. This is awesome. Whoa, I got to buy. I want a FOMO, So your posts are very nice and objective. They don't immediately cause me to want to FOMO or anything. They make me go look at the chart. You'll be like, oh, 8 MA retest here on the whatever time frame. And I'll be like, oh, that's a good area, as I saw in your trading tips from earlier. So I need to go take a look at that. And then from that, I can develop my own plan rather than just building emotions.
That's what I want to, because there's so many ways to trade. No one's going to tell you the right moving average, or whether it's Elliott waves or Ichimoku, whatever you want to do. And you have to just kind of, I just want to teach people how to fish. I don't want to give them the fish. I want them to take whatever knowledge I have and apply it to their own methodology. Some people are amazing in the 15-minute. Other people just only use the weekly chart. There's everything in between. So there's people who buy breakouts. There's people who only buy retests. There's people who just love the chop because that's how they trade.
Yeah,
so
you're right.
We got to have room for all of that, And
that's a good point too, is a lot of people try to emulate others online or people they see online, and that might not fit with their style. So find out what works for you. You might trade great in a range. I might trade great in a trending market, and people are trying to, build their strategy around both of ours because they see us both being successful. And, it's just not going to work out. There's going to be times where you're going to see one account absolutely killing it during current market conditions and just kicking ass. And another account's getting chopped up and having issues because markets change and we're not all good at everything. It's just like an NBA shooter. Some of them are good at mid-range jumpers. Some of them are good at three-pointers. Some of them are terrible at free throws. It's just hard to be good at everything. It really is.
That's the way it goes. I think you have to, and even more important, but that's so true. And not to take away from that though, but it's really risk management. It's it's okay to try a million different things if those are all small attempts, if they're all minimal bets. And a lot of it is just not overexposing yourself to any one idea. And I get caught up in it still too now. And I find myself in a position where I say, how did I get here? How did I get to the point where I really want to break a rule here. I really want to add to this loser, even though I shouldn't. I really want to blindly add to this position. Or I FOMO in because I've had a couple of bad trades and you FOMO in. And it's now it's, pulls back and you sell for loss, then it goes back up and you wish you hadn't. And it's, so it's all comes down to really, a lot of it is just risk management and not overexposing yourself really to any one idea. You know what I mean?
So that's a great point, and I actually struggle with that. So I'm one of those people that can't leave the gym before I make a shot, right? I can't leave on this.
Yeah. No, I'm with that. I like that.
But that's not a good way for trading, right? Because sometimes, and I'm getting a lot better at this. I used to be I can't have a red P&L day, right? I used to be I'm only down 1% on my account. I can do a quick trade. I can get back to at least, 0.1% profit. It'll be a green day on the portfolio. Yeah. And now I'm okay sitting on 1 or 2, 3, 4 red days in a row. Mm-hmm. But I'm not, it still kind of bugs me. What do you do? How do you, you walked away at the casino. How do you really control that? Do you still have the urge to do it sometimes, or do you
I'm definitely okay taking losses. I've had enough of them. just if it's not working, I shut it off, man. I'll go play video games. I'll go shoot. Like I have a little basketball court near my office, and I probably put up 400 shots a day.
Wow.
Just to keep me focused. And I'm a terrible shooter, but I'm better than I was last month and better than I was last year. You know? And that's kind of the same approach. And if I'm not sure what to do, I'll go out and I'll shoot a bunch of free throws and some jumpers.
Do you have, is that like if you're feeling something with the markets, do you have like a go-to, you're like, okay, the market's pissed me off, I'm going to go shoot hoops. Like, is that just your outlet?
Yeah, it's one of them, but that's definitely one of them where I might just go take a walk around the neighborhood.
Cool.
I might go in the jacuzzi or like whatever, do something to kind of reset things. Just whatever it is, you turn it away, walk away.
Wow.
But if it's not working, just walk away, go do something else. I have the luxury of doing that. So that's fine. Like I don't have to trade every day. So it makes it nice, but.
Well, we shouldn't trade every day technically, right?
No, we shouldn't. That's boredom trading, unless it's a real opportunity.
Right.
So you got to have something, you got to have a good way to reset. Like everybody can go for a walk. I think that will help anyone.
Yeah.
And it's like one of those things I've always talked about, where, if you have a really good trade idea, but you're not sure, write it down on paper, like pretend you were trying to convince your friend to enter the trade. You say, hey, I want to enter here because of the prices on this support or the price is breaking out here, whatever it is, you write it down, then go for a walk and come back and read what you wrote. And like, does it still make sense? Do I still believe it? Challenge yourself. So you got to find ways to like, to challenge your own mind.
Yeah.
To get that the right outcome. Yeah.
I think I'm going to use that though, because I will get in times where I'm like pissed or something. I'm like, okay, I need to settle down. I won't like enter a trade now if I'm emotional because I can tell. But I'll still keep trading, or I'll still keep like obsessing at the chart and looking for an opportunity. So I'm going to find like your basketball hoops, or like, because you just listed like 5 things that you'll do when you feel this way. I can't list one right now. So for me, that's really good for me to learn that and recognize that. And
what about grab that guitar, man?
I need an outlet. Yeah, you're right. If I'm like getting pissed off at the market or whatever, or like feeling like emotions or FOMO or something, I need to find the guitar, or I need to have something that I'm going to be like, you know what? Every time I feel like this, I'm going to go do this, de-stress, come back, because it's too dangerous to trade when you're not calm and relaxed and just, you're just, it's just too dangerous. But I need that outlet because, sometimes I'm one of those people that'll be like, nope, I got this. I can do this. Let's go. I still have risk management, but I'll still, maybe force trades or something. So
I think we all do. That never goes away. It really never goes away.
Right.
At least it hasn't for me. I mean, some of the best, maybe one day I'll be a good trader and it will go away. But, in the meantime, you're always tempted. You're always faced with, oh, maybe this will work. Maybe this is it, tempted to jump in early. It's all about timing too. And it's, rules are great, but like following them is so hard, man. I mean, I don't know what it is. It's, so it's, it's just us against ourselves, really, more than anything. And if the first step is to realize that.
Totally. Yeah. So what is your best moment as a trader?
My best moment as a trader is,
if you can remember,
like a specific trade.
What is, as a trader, because you're now, trading a full time, what is your best moment that you've ever had that you can remember? Anything. It could be your best trade. It could be you finally realized something, built a strategy, Well,
honestly, like it's 2 things. I'll tell you my best trade, but like the whole thing with the trading book is amazing because people will send me my book like on vacation. I'm in Hungary by some hot springs and I'm reading your book.
That's cool.
There's a picture of it. I'm like, this is mind blowing. And, or like this book has completely changed my mentality. And now I've gone through every mistake in the book. It's like, you knew me and it's helped me a lot. And that's just awesome. So as like a trader, that's my best moment, is like actually making a difference in like all these people's lives. So
that's awesome.
My best trade, I'll probably never repeat. It was like a 28,000% gain on spot. And it was a OTC penny stock that I bought. I bought it like when my daughter was born. Wow. And then at like 0014, which is like 14 thousandths or whatever. It's not even a penny, right? And it went to like 45 cents or something. So it was like a 27,000% gain. And,
Jeez.
I was on top of the world. I didn't sell there. I mean, I sold some, but
How long was it that you were holding that for before it did that?
I think it was a few months.
Okay. Not
It was
bad.
definitely a few months. And the thing is, like, all in my early days were some of my biggest gains because I didn't know any better.
Oh yeah. Well, yeah.
I didn't know,
Totally true. What was the ticker for that
trip
one?
and fall into some of those things.
What was the ticker on that one?
VPOR.
Okay. Cool.
Vapor, and it was SPLI before that. So
And
I actually wrote about that story in my blog, I think. But
awesome.
I'm just a grinder now. Like I want some profit, and then I want to walk away and go do something else. So I'm just hitting singles. I'm just grinding. It's kind of my style.
I do the same thing. No, I think once you've made some really big trades and you've had some 1,000% gains and you feel like you're doing well and you're not chasing money, you're not chasing riches. When you first start off and you've got your normal day job or whatever, and you got 10K in the bank, you're chasing riches, right?
Yeah.
And you're like, I got to hold everything because I don't have very much money into this. I've got to hold everything. I've got to have huge gains. But I feel like, and maybe you don't relate to this, but I feel like once I really hit some big ones, now I'm like, okay, those are so few and far between that I'm happy with a 100% gain or a 200% gain. And I'm not even having the chance for these 5,000% gains unless it's like a small moon bag that I'm just leaving some profits in.
Yeah, I think we have to decide. One of the things that's interesting, though, I learned from some of the veteran traders. I try to, guys like Peter Brandt, and they talk about is really letting your winners ride. And I'm still trying to figure that out.
True.
1,000%, what'd you say, 100% gain? I mean, I'll take it. I mean, it depends what market you're in. I mean, these new guys who are doing NFTs, I mean, they're doing 10,000 or GTFO. I mean, they're going for it. I just like to scalp. People ask, I don't even use targets. For me, I just want profit. As soon as I'm in profit, I move my stop loss up. Move it up at each level, and then whenever it triggers, I'm like, cool, like I made some profit.
Cool. Yeah, we're gonna actually talk about that more in a minute, I think. So,
yeah.
Let's get to our next section. So I want to really know more about your routine. So do you have like a set start time that you start every day?
No, the day doesn't end for me or start. Because I tweet and trade. Really the 17 hours I'm awake.
Wow, that's cool.
In the day, I mean, not actively, but like if I'm in bed and I'm laying down for bed, I'm still checking stuff out. I'm looking for something worth tweeting. I'm trying to add value. I'm looking for engagement. And if I see something, I'll drop some trades in.
Great.
In the morning, other than like family stuff, take my daughter to school. The legacy markets open up, like a couple hours later for me. So I'll scan the market. 20 minutes maybe. And then I'll just chill out. I'll either, just walk around, just clean up from the night before, pick up all the beer bottles off the floor or whatever. Right. And, just wait for it to open and try not to, jump in too fast in that first 30 minutes of the session. But like crypto's all day, it's forever. Mm-hmm. And, hopefully forever, but, it's all day. So I'll just, if my phone's in my pocket, I'm checking stuff out, all the time.
It's hard to escape, isn't it? So
it's really what I do. And I like the fact that people rely on me. And it's a little really egotistical, but like most people have a real job and work all the time and they can't watch like I do. So they'll even have me on like a notification. So I try to take that, keep that in mind and treat it with respect.
That's great.
Let them know, hey, first MA50 touch in a while or first whatever, give people some stuff to look at and give them some, some clues.
It helps them learn. It helps them learn too, but it's cool that you care about your followers, because it's really nice for us to be keeping updates coming to them and like showing them that we appreciate them being followers, right? So,
dude, it's what it's all about. I mean, they've made my life possible in many ways. So, that does mean something to me. And like when I was going through cancer, I can't even tell you what it meant to get the support I did receive from the people who follow me. And I mean, that's in the book and I've talked about it.
That's cool.
And so I mean, just, random strangers basically saying like, I have your back. So like that was pretty cool.
That's crazy. And then all the people being assholes and saying negative things about it, I just can't imagine like
there weren't many.
Where they come from.
There weren't many, dude. There weren't many, but they set me off.
They just stick out, right? They just stick out. So I felt terrible every time I saw something. So I think we've learned, hopefully, just any negativity is like we just block it and move on because anybody that's saying that kind of stuff isn't worth listening to.
Well, it's the thing too. It's like, first of all, I knew if I was going to open myself up and ask for love from other people, you're going to get some hate.
Mm-hmm.
Number one, but two, like if I just said, hey, I'm giving everyone $1 million, you'd still have a couple people say, oh, you're materialistic. We shouldn't be using money. And
It's
like,
so true.
you're always going to have like like someone who's going to come, try to like knock you down or whatever. So
that's so true.
How do you not get triggered by them? I mean, that's up to you. It may be, I don't know. It's not, it's hard not to get triggered. So yeah.
Yeah. Cool. So what kind of setup do you use for trading in your computer?
Yeah.
Like how many monitors do you have? Do you have a custom built computer? Things like that.
I use like an Atari system. It's old school. No, I use
beep boop beep.
So like if I'm if I'm on my phone, it's just my phone. I'll trade from my phone. But I have let's see.
Do you do a lot of trading from your phone?
Only because if I'm moving around.
Gotcha.
And I try not to, but if I'm at dinner and my wife's trying to talk to me, I'm trying to put a trade in or whatever.
I know how it goes.
Like my office, like the office I'm in now, I have 3 monitors. That's for podcasting, and then I have another one which I trade at, and I got like a 4 monitor setup, and I have one monitor for like TradingView or TrendSpider. I use both of them.
Okay.
And then I have a couple different monitors for Twitter, because I follow some people on Twitter and kind of use that for talking to people looking for ideas. And then I have my brokerages and like the 4th monitor basically. But it's like more monitors doesn't mean like more money.
Right.
It's just how you use it. And funny, when I first went to a multi-monitor system, I went in this crazy like losing streak, and I dropped like it was bad. I just went in a bad losing streak. So
oh no.
Settled back into where I am now, and so I got 4 monitors just for trading. But I do a lot of simple just tweets, which are just from my phone, charts, whatever. I'm always trying to stay connected to the price action.
That's great. I have 1 monitor because I have way too much ADD for multiple monitors.
But you got a big one though. You're talking about like
49
inch or something.
Yeah. So once you sit down at your computer in the morning and you're gonna log into Twitter or whatever, what's the very first website that you actually log into when you pull up your computer?
It's already open. I mean, I have TradingView, I have TrendSpider.
Oh, you leave everything open all the time, huh?
Yeah, it's cool. On rest. Just boom. So that's all I need: brokerage, Twitter, and the charting websites. I don't go to like CNBC, or I don't go to like whatever Motley Fool or whatever. I don't go to like Bloomberg, any of that stuff. I just like the price. Like I try not to look at anything outside of the chart.
Yeah,
because it's not. I don't understand what's outside of the chart. It's all speculative.
I think for new traders too, kind of staying off Twitter until you've actually had a good look at the chart. Because back when I was first started trading, I would go on to Twitter, see a bunch of people posting, and then whatever they're posting, because obviously if I follow them, I usually trust them to some extent, see them posting, and then I would get to my charts and I would automatically have like a pre-bias because of what I saw.
That's the thing. I mean, that's the shiny object trade. Is where you see someone mention, ticker, and it's the shiny object. You just jump at it. And it's all honestly why I also try not to pay attention to what too many other people are saying. I mean, it's good and it's bad, but it throws me off course. Like I want to trust my own read, because it's very easy to just see someone say one thing and that one thing to stick in your mind. Yeah,
it's very true.
They said, and for whatever reason, and maybe because you trust the person or you've had a good relationship with them, you don't know what really the context of what they're saying.
So true.
Maybe they're showing you their green trade. They're already in profit. They bought 20% lower, and now you're buying their bag. I try to just stick to my own analysis, because it just if I let someone else get into my head, it just takes me away from feeling the pulse of the chart.
Yeah, that's a great point. I totally agree. Just not having biases elsewhere, because then you have conflicting thoughts in your mind. So you need to be only in your own head and only in your own zone, because everyone's trading strategy is different anyway. So what they said could be out of context or on a different time frame or whatever. So I totally agree. Different. And there's nothing worse than kind of having one bias or one thought on your own and having that other person in the back of your mind and not trading your setup because of what they said. And then when it happens and you're like, shit, and then now you feel like this need to get that bag. So
100%.
So you use TradingView and TrendSpider. Are there any other special products they use for trading?
Negative.
Cool. Because some people use like funding sites or things like that. So
I don't even try not to. I don't even look at like Bitcoin dominance chart. Like,
cool.
I don't look. I try not. It's the price. It's the price in relation to support and resistance. It's momentum. It's short-term candlesticks. It's all that stuff. Understanding the trading ranges. But like there's I don't know if it's the best way. It's just the way I do it.
Yeah.
Other people use funding.
I love it. You're skin and bones. You're a skin and bones trader. See what's on the chart, trade it. You don't care about shit else, The chart will tell all. So
it just worked for me, man. It's just because there's like everything else to me is a narrative. Like if you're telling me it's so important, I will know because I'll see it in the price.
That's great. That's a good point for new traders as well. So that's awesome. So do you have a watch list of all of either, stocks or crypto?
Yeah, I have a couple different ones. I mean, I have like a general watch list for crypto, and then
are you able to show those on here? Are they on TradingView?
Yeah, sure. So this is just a general crypto watch list. It's not all inclusive.
Okay.
And then
do you have any markers or any way that you organize them?
Well, I just keep some of the majors up top: Bitcoin, Ethereum, Litecoin. And then some of the alts I may be trading or looking at, I'll slide them up. The hotter ones like DOT, Sol. I've been trading SHIB a little bit recently, ADA. And then the stuff that's in here, it can get lost. But if, like Luna should be up there. Luna's been incredibly strong. But if it gets lost, I can drop it in there. And then, like when Bitcoin Live, I have basically a list I go through for Bitcoin Live.
Oh, cool. You have different watch lists. That's actually different lists. That's really cool. I don't use that feature.
Oh yeah, definitely. So I mean, this just for crypto. I have these two, and these are all the ones that people requested from today, from Sunday's video, and then the ones that I cover from AVAX up. I cover every week.
So for those that don't know, to create a new watch list, you just hit that plus sign up top?
Yes.
Okay.
No. You click in there, and then you go create new list.
Oh, okay. Of course.
Yeah.
Easy enough.
Like
so
that, right?
Does that help
for those who don't know, right?
Yeah. I mean, hey, I've never created different lists. I have one list.
Oh, definitely.
So does it help
equities,
you
right?
to have multiple lists?
Yeah, I like equities. I'm trading the stock market. Here's my equities watch list.
See, I have my equities and crypto all on one list, and I just kind of have them organized. Okay.
Yeah, it's too much for me.
I'm going to have to try this.
Stuff I'm watching. I'm in these plays, right? I'm in just this one, and these are stuff I'm watching. Tech, banks, some of the gambling stuff, and then the stronger stuff I move up towards the top. So like if I'm doing equities, I'll just come in, go like this, and I'll look for relative strength. And if it's interesting, it's getting there, I'll take it and I'll slide it up the list kind of thing. Cool. So, but there's a million ways to do it,
So you've added, so is there anything on your watch list right now that you're actually watching that maybe you would consider trading? How do you monitor these things after they're on your watch list? What I do,
it depends what's going on with the market. Like when the whole thing is dropping and we're looking for relative strength, right? Like say the whole market is dropping, like back here.
Okay.
I may be dropping lower time frames, like an hour or 4 hour. And what I do is I'll just scan through and I'll look for relative strength. Like, okay, Ethereum is rallying against Bitcoin a little bit. I can see that in the BTC pair. Let's see, Litecoin's weak. See, everything's kind of heading down, but I'll wait to see, okay, a little bit stronger SHIB, right?
Okay.
I'm looking for relative strength. When most of them are kind of have the same price structure, you're looking for what has a little bit stronger. Algo looks a little bit stronger there, right? Tagging MA50. This one hasn't done it right compared to AAVE. So you're just kind of looking at relative strength and deciding where you want to deploy your funds. Like you want to go with momentum, you want to go with strength. So that's just kind of when I'm looking for trading ideas. Look at ATOM, right? I can see the volume. I see that price acceleration. You say, let me slide this one up a little bit.
I posted them. I actually bought some Atom this morning under $32. Nice. So I like to see that.
I mean, beautiful. Tweezer bottom, right off that lower Bollinger. It's still, got that MA200, MA50 ahead. But that's a real nice price movement. I mean, you're erasing like a week of losses.
Wow.
So, that's how you would go through. I scale, actually 4 hours. So it's like about a day and a half. Of price losses there, but there you go. Look, I mean, ATOM looks pretty good.
So we've identified Atom as being a very strong asset at the moment, right?
I'd say it has relative strength today.
Okay,
is what I would say.
How would you use that information? What would you do with it? You're at your computer now. If you weren't on stream, what would you be doing? With this chart?
Well, like in general, the first step is to identify relative strength.
Okay.
It's taking, scan like maybe 40 or 30 tickers and find like 4 or 5
Okay.
that have the most strength. Because if you want to go long in something, you want to play something that has been going long and you want to buy a dip in that. So I'd pick the ones I want to watch. I'd take ATOM. Maybe I'd look in a lower time frame and identify somewhere I want to buy the dip. Maybe right here, I'd say, look, if I missed it, I maybe want to see it come back to here. I want to see it come back and test this high that it had just broken.
Okay.
If I'm really itching, I go to a lower time frame and see if there's some kind of flag or something, right? I'm not just going to jump in here and buy into this acceleration, especially given the prices now. What are we at? The daily on the 8 EMA. So you could very easily see another rejection.
Okay.
Right? The 8's flipped into resistance. So I'd want to buy a dip in an uptrend. I first identify the uptrend, then I come up with some type of a trade thesis, which ideally would be buying a dip in that uptrend. I've identified a support level, right? A support level that should be support. The resistance once established, it broke through. I'm hoping it comes back and it finds, right there. I'm giving myself some thesis, some structure upon which, because the third step is you have to identify your fail point. If my whole idea is that when it comes back here, it's going to find support and say I buy in here. If it fails and it's down here, I need to be out because the whole thesis, the whole trade idea has failed, right? So I find the play, I identify the kind of the structure I'm looking for, and then I define my risk, and ideally before I even enter the trade.
Very cool. It's awesome. So basically you're saying that you identify something that's in an uptrend, and when something's in an uptrend, you assume bounce. So you're looking for supports to buy. That's great. How do you identify the uptrend? So how would you actually go about identifying something in an uptrend? Like, what are your criteria for this?
Well, really, based on classical charting, an uptrend would be a rising. If you go on the daily chart, it's going to be a rising 200 moving average with the price above it confirming that. So this is by definition an uptrend. Now there's gradations of an uptrend. It's a little bit threatened because we are below some of the shorter term moving averages, the 8, and the 20 here. But it's medium hot. It's not hot. It's not cold. It's above the 50 as well. So it's above really these two. You're in pretty good shape, but it's threatened a little bit with moving averages. So let me find something a little bit stronger. I'm trying to think what's been super strong recently.
So you're saying it could be a bear trap. It could be the signs of a reversal. You identify an uptrend. You really will obviously go outside in. Like, for example, like with Bitcoin, right? Bitcoin, the weekly charts always been an uptrend. Very much recently, especially since it broke up above really 14K. We were watching this MA50. It never closed below it, right? Cool.
So what you want to identify, you have an uptrend, and then you want to see what's going to weaken the uptrend. That never happened. So you're still above the 200, you're above the 50, longer term time frames. This is beautiful. We're above 8, we're above everything, right? So that's a clear uptrend. Then you have gradations of it, in lower time frames. ATOM, it's an uptrend that's at support, but this is a level it doesn't want to move. So it's an uptrend that's testing kind of a key level, testing kind of that daily MA50. Even on this chart, we haven't closed below that since July. Right. So you want to buy uptrends at support. Okay. Because trends will tend to continue.
And those also provide the best risk reward opportunities then as well.
Yeah, they really do. Yeah, they will. And ideally you're buying at a level which will tell you the momentum, may slow down. Like you're buying at kind of a potential failure point. Here on this chart also, you have the recent higher low, this horizontal support. So if you kind of lose the 50 and then you lose these lows, you say, okay, this thing's in more trouble than I think. Maybe it comes back to 20. So from 30 to 20, you save yourself, a lot by defining your risk.
50%, yeah.
Right. So you want to look for setups that give you real clean information. Like, for example, this is Las Vegas Sand. This is an equity chart, but I was looking at this and I had this marked up. But if you'll notice, you see the price is pretty clearly establishing a resistance level, like right here. Right. And all these bounces, it was rejecting. So if you're watching that kind of intraday, when the price breaks up above that, that's going to be a clear signal. You want to look for kind of multiple data points that are establishing a very clear level. And ideally for me, it's a horizontal level, not some, random diagonal, which you could draw it this way. You could draw it this way, you do blah, 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 right? The diagonal. It's a clean horizontal level, a clean supply and demand level.
Reversal pattern.
Yeah, so something like that. So that's the kind of setup I'm looking for, something like that that's going to give me an easy way to know if my trade has failed. I could enter here. If it fails, if it comes back down, I can get out.
So
but
do
if
you
it jumps back up above it,
do you set alerts? Do you use stop limits or stop buys? Do you use limit orders? Do you prefer to market in?
I try to limit if whatever possible. I definitely want to limit in.
Okay.
I try to fill like under the bid as if possible, but it depends. My impulse control isn't always what it should be, but like in my book, and I talk about it, you want to try to fill below the bid. You want to get that low ball bid.
Can you kind of explain that for people that don't understand that term?
Like if the price, if you want to buy a little bit of a pullback in an uptrend, and oftentimes, even on a super strong chart, let's say it's accelerating in the 1 hour. You see out here, it's pulling back to the 8 EMA.
Okay.
So you want to buy you want to buy the consolidation in the uptrend rather than buying when it's already showing a little bit of short-term weakness.
Mm-hmm.
So let's say, up here, it's, 39, whatever, you're trying to bid lower at 39.40 or 39.30, just some type of a discount to that current move.
Okay. So you're basically saying you want to buy red.
You definitely want to buy red. You want to buy the red and sell the green as a general concept, but you want to buy the red of an overall green move. Right? Not just the red of a red move. You don't want to catch a falling knife. And the thing is, there's so many, when talking about crypto, I'm showing you equity markets, but when you're talking about crypto, not only are there just a bazillion things to play, I mean, it's open all the time.
Right.
Which means you really should only be playing premium opportunities.
100% agree.
And a premium opportunity is helped to be defined by that entry. So if you do a little bit lower entry, like on Ethereum, 3170 would be like right here. I mean, I don't know if we're going to get there, but like, let's say something weird happens. You should have a bid in right now at 3170, 3180 on Ethereum.
All right. Deal.
But there's still a decent chance it will fill. And if the price does flash crash, there's a good chance it's going to bounce from this range. So, that's a great trade setup. You have a great chance from there, for example, right? That's just how I like to do it. Low ball bid, because we're going to find a way to screw it up. I know I find very creative ways to screw up my trades. And so to help myself with that, I try to get better entries.
Well, and you can see that. So you're exactly right, though. It's like kind of waiting for entries. And if you don't get it, there's going to be another opportunity, because you can see that big green wick candle, like, is this the daily chart? So 6 days ago or whatever, there's that big
October
green.
1st. Oh, this one here?
So a lot of people maybe had bids set lower. We have that long wick below, and then price goes up. And instead of waiting for those bids to fill and waiting for their preferred entry on this time frame, they might FOMO in up here at the top. And then now you can see prices dropped, and we kind of have a little bit of a topping-ish sort of rejection pattern here. And
it's not a spot you want to FOMO in, because you're right at that key lower high. And so Ethereum never really broke up above 3670. You can even see people maybe shorting it from that level, given it's a pretty clearly defined level, especially is now. So, on the flip side of that is now you've got a very clear breakout signal to watch. If Ethereum gets above 3650, you just go long.
So how would you play that? So if you're going to trade this, how would you actually play that trade if it does in fact break out? What would you be looking for, and how would you enter that?
I would just buy it at 3650 if it broke.
Market buy? Stop buy?
Probably.
Wait for a close?
No, I'd probably market buy it right there. Like when I'm buying in support on a dip, it's usually when I'm doing a low ball bid, but I will market buy right on a breakout.
Okay.
And then I'll set my risk a little bit lower. I might do like 3620. Very tight, very tight. Yeah, for my stop loss.
Are you going to do a smaller position on a breakout and then add if you get confirmation? Is it just kind of depend on the situation?
In this situation, I'd probably go full size, because it's right at that level. When I'm scaling into a support, when buying at support,
there's a strong resistance. There's a lot of rejections there. So we would assume that if that breaks, especially with current market conditions, that people would be rushing to get in, and we wouldn't see that level, immediately return. Right.
And it's going to go to like 4K probably. If it
I would agree.
Or 3950 or whatever. So, I feel pretty confident buying there. But I would also, even if I was incredibly confident, I would still say, all right, if we get below 3600 or 3615, I'm just going to cut it out.
Yeah.
And then I can buy back in again if it gets above 3650, because that's my thesis.
Yeah.
Right. That's my whole thing, is I'll be long above that level. And if it's back below, that amount, I'm out. So,
well, and I appreciate you talking about, having a cut and an invalidation, because some people will market into something on a breakout and they don't have an invalidation level and they don't know where to cut it. And a lot of times those breakouts that are fake breakouts, they kind of slowly fizzle out and they go slow. So everyone still holds. and then it's all at once. It drops off when everyone finally cuts and panic sells when they're all underwater.
Yep, 100%. I mean, a lot of times, for whatever, it seems like they know what our stop losses are, and they trigger it. Whoever they are, the market makers.
True.
So you got to be careful with how you manage your risk. I think, for example, you can't be afraid to jump back in on a failed idea if that idea becomes a good idea again.
Oh, okay.
So like if your whole idea is that you buy support here, all right, it's held, now it's down below, but if it comes back above it again, you can jump back in because your thesis is valid.
Basically like a deviation below.
Yep, and then you have a bear break, you have a false bear break or a spring, bear trap at that point. So
I think what a lot of people do is they actually see that breakdown and they end up trying to short that instead, instead of sticking with their original idea.
Well, shorting it's okay if they define their risk properly, because the short would fail if it went back above that level.
Correct.
I'm okay with any idea as long as you're defining it reasonably. As long as you just have a good idea of when that idea fails. And you're willing to walk away from it.
So what's your risk management look like? How do you manage your risk? Do you have any set rules or strategies?
Poorly. I'd say I manage it quite poorly in general.
I mean, we can always be better, I'm sure.
Like with poker, I walk away. Like if I have like that situation where I'm getting bad luck and I know I'm gonna get emotional, I'll walk away. If I'm having a few bad sessions in a row, I just won't trade for a while. So that's how I handle that.
How much do you have a certain time you take off, or is it just kind of like?
No, it's whenever I feel better. I'm just mindful.
Okay, so when you take this time off, let's say you had a really shitty day today, you lost a bunch of trades. Are you going to still look at the charts, still look at the market? How do you manage it when you're taking time off of trading because of a bad streak or whatever?
Well, I'll still always look at Bitcoin because it's kind of my job. I'll keep an eye on that. But like equities and stuff, if I'm having like a tough streak, I'll just take a couple of days. I won't even really look at it until I feel no more emotional connection to it.
Okay.
So I just try to be mindful of that. It's not everyone can do that. We're all built differently. I'm personally very mindful of my own emotions, so that helps me kind of in whatever in everything in life. So yeah, I just try to, when I notice something's not right with myself, I'll just walk away. And then when I feel better, when I'm cool, I'm like, let's go out, let's try it again. I'm ready to lose some more money.
But with risk management, it's okay, right?
Yeah, exactly. You got to get experience, and it's okay to lose a little bit, but it's not okay to lose a lot.
Strategy. I mean, it's just too easy to keep fighting a trend or whatever. I've learned over the years I'm very good at shorting. And on low time frames, but I have a rule: if I try short twice and it doesn't work out, I'm done. Because in the past, I'd be like, I'd be sitting there watching the chart and be like, okay, this short's going to work. This is a rejection. Oh, it's going up more. This short's going to work. And you just fight it until you've lost more than you should. So you walk away. I have my limit. So it's very good for people watching this to make sure that they have some sort of risk management criteria where they stop, they give up, they take a break because something obviously isn't working right here.
100% true.
Do you keep a trading journal or anything like that?
I do. I have a trading journal, like a document, like a doc or whatever. And what I do is, most of the ones where I just, if it's just a failed trade, a normal failed trade, I'll just write, okay, tried this and it didn't work. But if I really made a mistake and I broke a rule, I kind of highlight it and I put it in bold. Oh, okay. When I look back later, it will stick out to me.
Very cool.
So like normally it'd be like, I entered here and here on the thesis on the throwback this level and it failed. It's like, okay, fine. But if, I made the mistake of trying to short like a strong uptrend with no signal and just because like some guy, said it was going up. If I do something stupid, I really try to not run away from that.
Cool.
I try to write it down. It helps, but it's still hard, man. It's hard not to fall for temptation, and it's hard not to break rules.
100%. I mean, I'm sure, I still break rules plenty, but at least like my risk management is so good now that I'm like, even if I break a rule, I'm like, oh, but my risk management, I still have to take a small loss here. You've talked a lot about cutting losers today, and it's like, the one thing I need to stick with is still cutting my losers, right? Because the one time you don't cut it is where you're just going to get completely washed. So the more you trade, and those watching, the more you learn to trade. You see a lot on Twitter, people are like, oh, just add your losers, buy more, dollar cost average. And it's like, if your trade idea doesn't work out and it's going against you, your trade is invalidated. So you just got to cut it, find a new trade setup. You got to cut your losers before, you never know what's going to just go completely against you, and keep going until you're forced to cut it.
That's it. That's the one thing. If you're holding, if you're investing, you can dollar cost average.
Right.
That's fine. And
that's totally different time frame, and not trade. Like, that's just a totally different thing than we're even talking about right now. So it's like people really need to understand to separate the two between trading and investing.
100%.
Do you have any set rules that you follow? Like, do you have one or two big rules that you always follow, or that you always are mindful of?
So in general, the number one rule is sticking to my stop loss, right? There's all those rules like not moving my stop loss away from the trade. So for example, like if I'm long and my stop loss is 100, and the price at 103, it would start to come down. I don't just move my stop loss. Now I'm going to move it down to 99. I'll just keep moving it away. Like never move your stop loss away from the trade.
That's a good point.
Number two is I won't add to a loser unless it's at like another major like support level, like a major moving average or a major horizontal level. I don't just add at some random level.
Can you elaborate on that? Because I actually agree with you. And I don't know, I'm sure you know Mr. Anderson, True Crypto on Twitter. He actually posted the other day about not like major trading tips. And he said, don't add to a loser. And a lot of the comments were saying, I add to my losers all the time and it worked out for me. Or why would you not add to your loser? Why would you not dollar cost average? So I think people really need to understand why we don't add to losers if we are trading and trading consistently.
All right, let's see. Where I have.
Do you have it in your book?
100%. That's one of the rules.
Awesome.
So actually I have a chapter titled, Stick with What Works. Where is it? Stick with what's working. Yeah, Chad, that's 39, less than 15. So stick with what works. So basically averaging down is okay if done in certain ways, such as when you've scaled in lightly beforehand and this new entry offers an even greater risk reward type of scenario. So like, let's say you wanted to jump in, your whole position is $3,000, but you did $1,000 at first instead of $3,000 at first. That's fine. And you bought in at like the 50 moving average. Okay. That's failed. And now the price is at the 200 moving average. Okay. Fire your second bullet. That's a reasonable spot to average down. You don't just average down because you're at some random level. You don't just average down because you're down like a certain percentage. Like, First of all, backing that up, when you're averaging down, you're adding to a losing idea. Like you're adding more capital when you were already wrong in the first place. So it's like, what if you think about that? Why would you do that, right? You want to add to winning ideas. You want to trade with momentum, not against it. So averaging up makes sense, but like averaging down is the thing you want to avoid, right? Because if you cut your losing plays early, there'll be less pressure on your winning plays to make up for those big trading mistakes.
Oh, I like
that. Right? Think about that, right? That's the whole point. It's like, we all put that pressure on ourselves. Oh, I traded ADA poorly. So now on my soul trade, I have to I'm going to go 100x to make up for it. And then all of a sudden you screwed up there. Now you have to go 1000x on the next one. So, don't don't keep digging a hole for yourself. Averaging down, with all due respect, is a complete noob maneuver. It's something you do because you don't have confidence in understanding when the momentum has reversed back in the direction you want. Just totally wait for some confirmation.
Or you're just not being patient for your entries and you're following in early.
You're just following in and you're not patient and you are not respecting your money. You got to respect your funds. You work hard for them. So just don't average down. And if you do, only if you have scaled in lightly and the price is at a key level.
100% agree. 100% agree. Cool. That was great. Do you have any other rules that you follow besides the ones you just shared?
I don't try not to trade like drunk or anything like that.
That's a damn good rule.
It's hard, but I try to if I enter a trade and I feel myself in my mind saying screw it, I'm going to go for it. That's not good. If you're or if you're saying to yourself, let me just try this, be mindful.
Yeah.
If you're let me try this. No, don't try stuff, be methodical, have precision. I just that's pretty much what I would say. In terms, I'm sure another rule will come to mind. I mean, they're all over the place, but most of them involve not chasing bad trades, and you have to look at the chart. Like, some people buy without looking at a chart, which is just insanity to me.
Yeah,
because someone tells them that like a new release, they're going to do an airdrop, or the new like update is going to do this and that. Like, none of that matters to me. Like, that's why people will buy or whatever, something like that. So, another one is, I'll only play something I've been watching. Like, it doesn't really matter what you play as long as it's something you've been watching, right? So you want to be finding your plays from amongst the plays that you've been studying. You understand the ebb and flow. You understand kind of the just the ins and outs of the price actions. You want to work from whatever's familiar to you. So play amongst your familiar trades, and that goes back to not chasing the shiny object.
Yeah, I think a lot of people don't understand that different assets can trade differently, especially on low time frames. So a strategy you're using on Bitcoin on the 15-minute chart might not work on the Ethereum 15-minute chart or the Litecoin 15-minute chart. And I've found that out firsthand. So I'll stick just to Bitcoin. And if Bitcoin's going sideways and ETH is trending hard, I still can't trade ETH the same way I would trade Bitcoin. So is it ETH or is it ETH?
That's what I don't know. I want to know. Is it ETH or is it ETH?
I always say ETH, but I say Ethereum and then I say ETH.
ETH, yeah.
But just because that's the way it looks. But you're right. I should be saying ETH. I do say Ethereum or Ether, but I don't know why I say ETH. I think I just say it as I read it.
That makes sense. That totally makes sense.
A lot of people say Doge, I think, as well.
Yeah, it's a Doge or Doge. I just say Doge now, but like there's no J in there.
It's dodgy. It's dodgy.
It's definitely dodgy, yeah. I'll give you one last one. If I have like a big losing trade, I delete that play from my watch list.
Oh, that's a great, that is a tip I could have used a long time ago.
You know what I mean?
No,
because if you lose and then you're just going to sit there and watch it and stew over it, if I lose a trade, I'm just like, cool. Like I hit X, it's gone. And then I don't have any emotional, I'll go play something else that I don't have any baggage with. Emotional baggage. You know what I mean? You like that?
I'm getting so many emotions right now with XSPA this year. XSPA is my biggest stock loser, and I lost like 3 different times on it. And the first time I was up like 120%. And I still ended up being a loser there because I got greedy and I was like, no, I'm going to hold this. It's going to go higher. So I took the initial loss and then I kept staring at that damn chart and fighting it. So
I got 2 more rules for you there.
I should have read your book sooner. I just started it. So yeah, hit me with the other rules.
Here's another important one. If you buy something and you immediately feel uncomfortable, then you have too much money in it.
100%.
Right. And it's like you won't realize it, but if you stop and realize, oh, why am I uncomfortable? It's because you went in too heavy. So you should immediately probably sell half.
I totally agree. And I think sometimes if I do enter a large position and it's up 3 or 4, or, like a small percentage, I might just cut that half to kind of lock in some profits as well. And then I feel more comfortable sitting in that with the stop loss, at a reasonable distance or whatever. But yeah, I try not to do that. But that's a great tip.
Last one is, and it's crazy. This one's like probably the most effective one. If you're in a trade, right, and you find yourself sending a screenshot to your buddy, like, hey, look at this trade I'm in. I'm up 120%. Like, that's when you need to sell. Like, the moment when you realize you're excited and you're showing your buddy the screenshot, you go ahead right there and take profit, because that's the top. And it's 9 out of 10 times that will nail it.
So many times.
Right? It's so true.
Well, especially as a low time, me, I'm a low time frame trader. So it's like that last acceleration where your profits are just going boom, 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 boom. And you're like, oh shit, this, it just went an extra 20% up on my P&L. That's when you take the screenshot, and then that's usually the top. Yeah. Every time. It.
So you got to be.
It's a great indicator.
That's probably the best one. It really is.
Even just to take half, even just to be like, just to realize it. And even if you want to keep holding, just be like, you know what? This is profit. Just take half of it at least. Like, and then once you take half, you'll start seeing your profits start to drop. You'll be like, shit, I should have realized more profit. And then you take more profit. So
take it, man.
That's what happens to me anyway.
Hell yeah. Heck yeah.
Everyone, I really just want to thank BigCheds for joining me for the first Trading Trench with a guest. Make sure you check out his book. You can get it on Amazon. I just started reading it. Make sure you follow him on Twitter. He's an amazing follow, such a nice guy, great post to learn from. And you can also check him out, I believe, on Bitcoin Live as well. So if you want to learn more from him, those are all great avenues. And I'll let him leave us with anything else he would like to. But again, we would really like to thank you. This has been great for my followers. And
I appreciate it, man. Yeah, definitely appreciate all those kind words. And just want to say thank you for having me.
Of course.
For the people who are out there struggling, just know that it's gonna suck. It's gonna be hard for a long time. And I think when you approach it like that, you'll do better. If you expect to just nail it right away, it's not gonna happen. You're gonna get really frustrated, overwhelmed with emotion. Just know that it's gonna be a very long, hard grind until you make it. And that's just what I would tell you. To be honest. True.
Have the long-term game in mind. And also, you guys see us making it kind of look easy online or whatever, but you don't see the emotions. You don't see what we struggle with. You just see our posts of a chart. So, we could be having a bad day and you can't tell on Twitter, right? We could be feeling super FOMO and you can't tell on Twitter. So just know that probably what you're feeling is normal, and you just need to learn, like Cheds had said, to acknowledge your emotions and control them appropriately.
That's it. Be mindful of yourself. That's the first step, and then manage your risk, and you'll be okay. Just put in some work, and you'll be fine.
All right. Especially if you'll be even better if you follow BigCheds and myself on Twitter. But anyways, you guys stay tuned for next time. We have Karush AK on stream next time. I know you're gonna love that one as well. Thanks for tuning in, and we will catch you guys later. Peace.
Peace out.